Welcome to Impact Investing 101. My name is Tim. I'm going to be your little economics professor tonight, teaching you about impact investments. So when it comes to my model portfolios, a lot of you have seen this pie chart before. We are going to want to have a nice diversified portfolio. I want to be clear that obviously we break it up between stocks and bonds. So this is like 60% stocks, 40% bonds. And then what I do is I break it up between what I call doing less evil and doing more good. And in each case, whether it's stocks or bonds, you should have more of your investments in these sort of doing less evil, little more standard investment options. However, by having those, what it allows us to do is to carve out part of our portfolio for these doing more good options. Okay? And so what I'm going to show you today are, some of these doing more good options. And I want to be clear that these only should be part of your overall portfolio. When it comes to impact investments, there are some very specific risks that come with impact investments. So we do want to be really aware of these risks and kind of go into it with our eyes wide open. The major risk that we have is default risk. So this is the risk that the organization goes bankrupt. And whether it's a stock or a bond, this is always the risk no matter what, that we are always worried about the organization going bankrupt, defaulting, right? Which means that we could lose our investment. This is going to be the biggest form of investment risk. From there, often with these impact investments, there is a lot of liquidity risk. So this is the idea that these impact investments are going to be locked in for 3 years or 5 years or 10 years. There are a whole bunch of different liquidity risks that we really want to be aware of to make sure that you're not going to need the money, to make sure that you're going to be just fine if you can't sell this investment for that period of time. The last risk is this idea of duration risk. I'll get into a little bit more about bonds. It applies to bonds rather than the equity side. But when it comes to duration risk, this is the idea that you're kind of like locking in, especially with the bonds, at an expected investment return. So you're going to see a lot of them, might offer like 3% or 4% annual return. And like right now, if you were to get a 4% annual return, oh my goodness, that would be amazing. That would be a really good return, right? But if interest rates start to come back up, that 4% might not be as attractive. Now, obviously, the opposite could be true. Had you locked into a 4% impact bond, 3 months ago, 6 months ago, before interest rates fell, you would be so happy, right, locking in at that higher interest rate. But again, oftentimes this isn't going to be a variable rate. This is kind of going to be like a fixed rate. And so the reason we want to be aware of that is that the sort of relative bonus or the attractiveness of that rate is going to change with interest rates. So I'm going to show you a range of sort of a wide range of spectrum. I'm going to start on the bond side of the equation, just because I'm a little more comfortable on this side when it comes to impact bonds. These do tend to be, I would say, a little more stable. This is something I'm a little bit more comfortable with. So I'm going to give you some example of these impact bonds that are available right now. So I'll just go through them. CSI, so this is the Center for Social Innovation. How many people know the Center for Social Innovation in the chat? You can give me a thumbs up or give me a little heart if you happen to love CSI as much as I do. So the Center for Social Innovation is a co-working space here in Toronto. This is where I have my office. And it's just a beautiful space. Co-working that is available to for-profits, non-profits, co-ops, actors, activists, just really broadly around this idea of social innovation. So I've been working there over 10 years, so I'm a bit of an old-timer at CSI, and I've seen them grow with community bonds by using community bonds as a way for the nonprofit to be able to grow their real estate holdings. So you can see here, CSI invented the community bond, right? Like they are OG, the original gangsters when it comes to community bonds in 2010 as a means to turn a nonprofit social capital into financial capital, right? They used the first community bond. They raised $2 million to purchase their first building, CSI Annex. So this is on Bathurst Street, just south of Bloor. I think a lot of people have been in there. It's a gorgeous space, right? From there, they did it again in 2014. They raised $4.3 million to buy the building at 192 Spadina, which is incredible. So this is a nonprofit that has now owned 2 giant buildings in downtown Toronto. And the only way a nonprofit can do that is by issuing community bonds. So really, really cool there. You can see here, CSI has never missed an interest payment, which is fantastic to see that type of consistency when it comes to the interest payment. What they're doing is they have a new offering. So you can see here, they've got the 2020 community bond, right? What they've done is they've shortened it to 3 years. I would say most of my clients, we would be looking at this $1,000 minimum, right? You're locked in for 3 years and you're earning 3% per year. What's kind of cool about this is that it does compound. So right now with my old community bond, I am a bondholder. Oh, interesting. I'm just getting a notice that it looks like YouTube has some sort of server issue, so the chat might be down. Oh, that's interesting. Hopefully you're all still here. I am recording, so I'm just going to keep rolling. And, if we do all get booted out, then I'll at least be able to throw this up on the video afterwards. So you can see here, $1,000 minimum. Oops. Really what we want is this interest compounding annually. The bond that I own right now, they pay it every 6 months. So I get like a tiny little bit of interest in my bank account every 6 months. But now I'm actually happy that it's going to be compounding. I don't really need the interest payment, so I'm happy to just kind of let it grow over those 3 years. It's pretty cool. They've got a great FAQ here. You can see here some great questions here. One question that always pops up is, are community bonds RSP eligible? Legally, yes. Practically, maybe. So basically, it's kind of a pain in the butt to get them inside an RSP. They are RSP eligible, but it can be a pain in the ass. So there's some hoops we have to jump through. The way I've been able to get community bonds inside of registered accounts is through Questrade. So Questrade has been like the best, but there's no guarantee that we can hold a community bond inside an RSP or a TFSA, but often we can. The trick is that there are going to be fees. So with Questrade, they do charge you $75 to get it in and then $75 to get it out. So if you're only investing $1,000, like, it's not going to be worth it. Just pay the taxes. It's not the end of the world. But what I would say is hopefully we get more movement here, and that it becomes easier to be able to have these things inside a registered account. The second one I'm going to show you is Sketch. So Sketch is an amazing organization, again, here in Toronto. They do arts programming for homeless youth, or youth who are on the verge of homelessness. So they're just so cool. They're an amazing organization. What they're doing right now is buying the building, or not the building, but the space that they're in. So they're on Shaw Street. We have the Artscape building, which is a gorgeous building, sort of Queen West on Shaw Street. Beautiful space. And Sketch has their home there. They've got some beautiful art studios. They've got some office space. It's really a beautiful setup for them. And Artscape has given them the ability to actually buy that space. So they're doing a community bond to be able to buy that space. You can see here they've already sold about $260K worth of bonds. They've had pledged about $700K worth of bonds. So there's still about $440K left that they are selling. You can see here the different series. I would probably nudge you towards this series D. $1,000 minimum, 3-year return, 3% per year. So the same terms as CSI. Now, when it comes to both CSI and Sketch, this is like real estate in Toronto. I don't know how well people are, in terms of COVID, how they're responding to this and how they're going to be able to hang on through this. So, this is why I'd really love to have them on the show, to be able to see how they're doing in this new COVID environment, and what it's going to take for them to be able to open up their space in a safe manner. to ensure that, they are still using the space and that they are still earning some revenue, obviously, to be able to pay back us bondholders. From there, the last sort of community bond I've got for you that's available right now is SolarShare. So SolarShare is a nonprofit co-op here in Ontario. The first two, CSI and Sketch, are available to Canadian residents, anyone across Canada. SolarShare is only available to Ontario residents. And there are a number of these renewable energy co-ops that are amazing and that are sort of all over the place. So there's one in Ottawa, OREC, Ottawa Renewable Energy Co-op. There's CED Co-op in Kitchener-Waterloo. I know there are co-ops in BC and basically all over the country. And so this is the one that I'm most familiar with because they are here in Toronto and I do own a SolarShare bond. The way they work is they own all these different solar projects all over the province. You can see these are like Sundance. These are fields of solar projects in Kingston, Armstrong, Aurora, Ontario, Kingston, Mississauga, Brampton, Markham, Brampton, Vaughan, right? So my favorite ones are the Noodle Factory. So I don't know if people knew this, but Brampton, Ontario is home to manufacturing and distribution of something like 90% of the world's swimming pool noodles. So you know what I'm talking about when you hit each other in a pool party. So they're made here in Brampton. So this is the roof of the facility. You can see really nice, bright, flat roof, great for solar panels. So what's kind of cool is that you can get like the snapshot. We can look at it actually live, I think. Yeah, monitor this project in real time. So now it is getting a little bit late. So, not too much solar, down to 2%. But you can see in the last 30 days, it's generated 82,000 kilowatt hours and worth about $44,000 in revenue, which is just so cool. So, they've got a bunch of these projects. The way it works here is you do buy a bond. Oh, do they have the terms? Yeah, it's just got to load here. So you can see here, 5-year term, 4% per year, and $1,000 minimum investment. So these are going to be really, really cool debt. These are bonds, right, that are really very much doing more good bonds and really trying to, still earn a rate of return in a very stable manner. But we're also doing a lot of good in the world. So from there, I do want to give a quick little shout out to two groups. Well, they're actually the same group now. CoPower and Vancity, and CoPower got purchased by Vancity. These aren't available right now, but I've just been so impressed. CoPower, they issue green bonds, and they sold out. They opened up a new round, and I think they sold out, I want to say about $5 million. And they sold out very, very quickly, which was super impressive. And then Vancity. So CoPower is now owned by Vancity Community Investment Bank, which is national. But Vancity Credit Union, which is only available to BC residents, they are a co-op. They created this really, really cool thing called the Unity Term Deposit. And this was a term deposit, so kind of like a GIC, but it's like a deposit. And it was paying 3%, locked in for 12 months. And really the proceeds were being used to help people and businesses affected by COVID. And holy crap, they achieved their goal of raising $200 million. Literally, this came out like 2 months ago. So I'm just so impressed by Vancity. Want to give them like 2 big thumbs up. And really excited for more of these. Give me more. The market wants more. We want more. So I would just love to see more products like CoPower, like this Unity Term Deposit. I think this tells me that the market is really hungry for impact investments right now. So those are on the bond side. On the equity side, there are some options. Now, these are going to be a little bit riskier, okay? So I want to be clear that, the impact bonds, like I said, feel a little bit more comfortable with. Now that we're talking about the equity side, the risk level goes up dramatically, but some would argue that the impact goes up as well. So the first organization I want to tell you about is Raisa Capital. So basically, this is a firm out in British Columbia, and what they're doing is they've got these investment funds that are directed towards Canadian local and social ventures that generate a positive, measurable, beneficial social or environmental impact alongside a financial return. So I would view this as almost like venture capital or like private equity. Oh, it wants me to log into SVX to see the fund. So this is going to be a product that is available on SVX, the Social Venture Exchange. So again, maybe we can have them on the show to be able to tell us a little bit more about it. But what they're going to do is this is almost like, private equity, venture capital. They're going to be investing in Canadian companies, delivering the impact aligned with the UN Sustainable Development Goals, which we love. Provide an accessible minimum investment to accredited and non-accredited, so you don't have to be a millionaire. This would be available for us. And hey, if you happen to be in BC, you're going to get a 30% refundable tax credit, which to me is just like icing on the cake. So would love to see a little bit more of their fund, but we can see their portfolios and the type of companies that they do invest in. So let me see here. It looks like, why don't I look at the Coastal Venture Route 3? Hold on. Impact Thesis. See our Ventures pages. This is what I want. So these are the types of companies that they're going to be investing in. So again, we invest in Raisa, and then they invest in these types of companies. So we can take a look at them. Atello, this looks like Salish Soils, New Mode. So there is going to be more tech side. We could go through these companies, the Hangar, a climbing lounge, right? Rona, that's kind of interesting. So we can see here, is it going to... Oh, here we go. So this is a cloud-based software solution, right? So more on the tech side. We can see here, this is going to be Salish Soils. So, what they're doing is natural landscape materials and premium organic soils. Super cool. And why don't we look at Terra Mera as well? So you can see here what they're doing is making organic food and sustainable farming cheaper, more productive, and abundant, which I love. I love this type of organization. So you can see here, this is a small little sample. I really like this because this is like a fund, that we can invest in this and sort of get this nice diversified exposure. If you wanted to pick and choose your initiatives, there is a really cool a thing called Front Funder. So Front Funder, this is equity-based crowdfunding. So this is going to allow us to look at specific companies that we do want to invest in. Now, some of them are going to be social purpose, some of them not. So I kind of leave it up to you to decide in terms of the impact. But you can see here, we've got esports. This is going to be plant-based protein power here. So you can see protein alternative, right? Digital asset fund, real estate investing made simple, some interesting things here. Some of them are going to be more, here's a halal mortgage fund. This is super cool. So this is, it's basically, rather than debt, they're selling units. So this would be available to halal investors, which is super cool. This stuff is going to be very risky. So if we look at, for example, this one, they're raising $750K. The minimum investment is only $250, which is fantastic. But these are shares. They're at the startup stage. And so this is like venture capital. Really, that's what this is. So when it comes to VC, there's a lot of risk. Really, I would want to look at this valuation. Is the company worth $750K? I would want to do a little digging. I'd kind of want to channel my inner Kevin O'Leary and pretend I'm on Dragon's Den or Shark's Tank. Is their valuation really worth it? I think would be an interesting question. So this gives you a sense of the equity types of investments that, Raisa Capital, Front Funder, really there's going to be some sort of cool options there. There are other options. I'll give a great shout out. I didn't put them in the slide, but I love them, which is the Fair Finance Fund. I just can't get enough of this. I'm so interested in sustainable food systems right now. So Fair Finance Fund, this is only available to Ontario residents, but this is basically a fund that supports local food systems here in Ontario. So these are going to be loans to entrepreneurs, social enterprises, and low interest loans to support sustainable food systems locally. Now you can see here the minimum investment is $5,000. We're locked in for 5 years. Unfortunately, the interest rate is only 2%, so this would be at the low end of the spectrum. But honestly, the impact of this, sort of the warm fuzzies that certainly this would give me to know that I am investing in local food systems, is worth so much that to me, really, the interest rate here is like 2% plus the warm fuzzies. So, really, this gives you a range of options. I am hoping that we will be able to have some of the folks from these organizations on the show so that you can ask questions and that we can dig into them. I would love to do that. But really, I want to wrap up here by saying, when it comes to impact investing, really the path forward, what I would suggest is like carve out part of your portfolio for impact investments. That, it shouldn't be a huge percentage. Really, be deliberate about what percentage of your money you are willing to put at probably a little bit higher risk to be able to have this positive impact. I really want you to understand the risks. Don't go into this sort of willy-nilly, right? Like you want to do your homework. You want to do your due diligence. I can help you really understand the risks if you're struggling, but you want to look at, we talked about the default risk. What happens, could they go bankrupt? The liquidity risk, are you locked in? And the duration risk, which is understanding that there might be some better opportunities that do pop up. From there, really what I would suggest to first-time sort of impact investors is take a small step. That don't feel like you need to do a huge percent. You don't need to do 10% of your money with this. You can do a much smaller amount, but just do it. Make some kind of impact investment. And, chances are you're going to keep learning. You do it the first time, you learn, you get more comfortable, you can start to invest a little bit more, you can start to look at other organizations, and you can really build this into a meaningful part of your investment portfolio.